Hello, everybody. This is Arthur Brown. Welcome to my Legacy Building Podcast. If you don't know me, you're about to find out about me. Top 1% mortgage lender in the United States. I've been in this industry for 25 plus years. I know the game. I know the ins and outs. I grew up in the projects. I own multiple properties. Matter of fact, I think I've owned in my lifetime close to 25 properties. I have a wealth of experience that I will love to share with you to allow you to build your dreams in terms of not only legacy building for your family, but also generational wealth. With that being said, let's jump into it. So if you guys remember my last podcast, I talked about forecasts for 2025 and the creative options that are available for non-QM loans. Well, I'm going to dive into some of these products that I think is going to really allow you to see my vision in terms of how I'm going to help you get into that next home. Here are 3 financing options that maybe you have not considered. Number 1, a HELOC. What is a HELOC? A HELOC is a line of credit. It is an adjustable rate and it's tied to what the Federal Reserve has as far as their interest rate. So example, if the Federal Reserve's rate right now, say at 8%, well, all of a sudden, if you hear on the news, the Federal Reserve rates drop to half, now you're at 7.5, but it is an adjustable rate. And most importantly, it's an interest only loan. Let's just say hypothetically, you pull out $100,000. $100,000 at a rate of say 8%, your mortgage payment might be, let's say $800. Well, remember that $800 payment is just interest only. It's not principal or interest, but that's one way of leveraging the equity that you have in your home to purchase more property or to put that money in the stock market or to pay for your kids' education as they go to college or a trade school, what have you. But that's number 1, a HELOC. Number 2 is a bridge loan. And it sounds like it really is a bridge loan. What happens is a lot of times you might have your house on the market, right? And you can't sell it for what it's worth. For some reason, you're saying, okay, I don't want to continue to drop the price. My house is just not moving, but I see this other house that I'm in love with. I want to put an offer in. Well, think about it, guys. In a market, sometimes that agent who has that house listed that you want to buy, they might not be inclined to accept your offer because you have to sell your house first in order to even buy the house that you want to buy. So that's where a bridge loan comes in place. It bridges the equity with the current home that you have with the new home that you're going to buy. And in essence, now you could still purchase that home. There's no contingency on you having to sell your home and you move into that property. And then once you move into that property, eventually the home that you have as a bridge loan will eventually sell. And guess what? You've knocked out 2 scenarios. You bought your new home, and most importantly, now you didn't have to stress on the fact that your current home didn't sell with the opportunity of you purchasing the home, your dream home that you want. So that's a bridge loan. And number 3 is the non-QM loan that I talked about in my previous episode, which is going to allow you to be more creative and picky in terms of what type of financing you're going to have. Anywhere from bank statement loans, which means that, guess what? You're self-employed. I'm looking at your tax returns and it's showing that you only claim $30,000 in income. But as I'm looking down each one of your bank statements every month, I'm noticing, guess what? You deposit about $50K. I could use that $50K a month because you take $50K times 12, that's $600,000 that you made a year. So guess what? I'm going off that $600K, not the $30K that you showed in your tax returns. That's huge, guys. That's a game changer. So that's been around for a while, but I feel like it's going to be more prevalent as 2025 takes off. So if you're an influencer, a 1099, self-employed individual, that type of finance is going to be huge. And it's not just bank statement loans, guys. I have a product that allows you to I could go off for 1 year just off your 1099 where I don't even look at the tax returns. I could look and see what your total 1099 that you claimed as far as income. Last but not least, leveraging seller concessions. Every offer that my real estate agents put in, I'll always make sure to say, don't you forget to ask for seller concessions. And what I mean by that is the seller has the house on the market. They have it listed for $450,000, right? You put an offer in at $450,000, but you're saying, hey, look, I need $10,000 because I want not only buy my interest rate down, but I want them to pay for my closing costs. So in reality, the seller is really getting that home or selling their home for $440,000. And you're getting it for $440,000, even though you offer it $450,000 for it, if that makes sense. So in reality, you purchased it for $450,000, but they're getting you $10,000 back. So that means that if you're leveraging your seller concessions, and if you put an offer in for 450,000 and it's on the market for 450, you're asking for them to give you 10K back to help you towards what? Your closing costs and even buying the interest rate down. So in this particular market, where the rates are at and the inventory where it's at, you have a huge advantage to ask for seller concessions to leverage that to help you pay for some of your costs when you're buying your home. So if you want more information, please book a call with me. I would love to talk with you, or better yet, go ahead and subscribe to my newsletter. I try to put as much relevant information as I can in it each and every month to give you an update of what's going on in our crazy, crazy mortgage industry as well as real estate. Thank you guys so much.